Okay guys, it's Saturday the 17th of March and we're going to have a look at our US indexes. Now we're doing it a little bit different today. I'm in Glasgow for the weekend, so I am making the video on my laptop. Okay, so with the S&P, quickly what we'll do is we will have a recap from last week's zones, where the market was trading, and then we'll move on to the trading week ahead. We'll look at the levels for, or levels of interest for day trading the week ahead, and then we'll move on to the NASDAQ and do the exact same thing. Okay, so coming into last week, we were still looking at this market being underneath this sloping trend line and also underneath this previous key swing point. Now, what we went over was how if the market started to break above our 2789 to 27, around about 2782 zone, we would then expect the bounce up into 2800 to 2811. So on Monday, broke up above, tested. On Tuesday also, we broke up above and tested at that level. And then what we went over was how this 2812 to 2800 level was key resistance, where we could start looking for potential weakness. If we were breaking down below this zone down below also, we could look for continued weakness. And then we had support at 2760 to 2755, 2742 to 2728. And what you can see is the market came down on the Wednesday, Thursday, started to test at the level. We got a nice bounce. Where did it come back into? 2760 to 2755, where we found resistance. So coming into the trading week ahead, what are we looking at? First thing is I'm going to get rid of this trend line. And what we're going to do is we're just going to adjust it ever so slightly. So we've got one sitting at this level right here. We've also got one just coming up with the pins also around about here. So it's really a bit of a sloping support zone. And what we're going to do is we're going to look now at this area up here. So really 2810 down toward 2783 as a whole area of potential resistance. So what we're having a potential ascending triangle basically. We've tested once, we've tested twice, we've found resistance up here once, and we have found resistance up here twice now. So potentially the market is starting to put in a little bit of a squeeze. So moving forward, this zone up here at 2783 remains key resistance. 2783, really we could bring it up a little bit toward 2793. Just mark it in right here. This is a key level of resistance now. And then up above also that 2810 to 2800 remains key resistance also. It's only really if the market starts breaking up above these levels that we would then start to look for further bullish continuation. Really, if we're starting to break up above, let's get rid of this again, the 2793 to 2783, again, we could look for the bounces up toward those previous highs. And then it's if we start breaking up above this level, we could then start looking for stronger bullish movements. Really, I'd expect to see at least 2825 to 2824. But really, if we start breaking above there, I'd expect the market to come up and test toward 2836 to 2843. Let's mark in a couple of resistance zones up there. We've got one at 2843, down toward 2836. So it'll be next real strong level of resistance. Then we've got another one sitting up above there around about 2855, 2856, down into 2850 right here. If we're starting to break up above these levels, I would really expect the market to press up and test at these areas. One thing we want to be careful of is if we do break up, we're not having a false break. Quite often with patterns like this, you can see a false break and then the market comes down, or we see a false break and then the market comes up and makes the actual move it was looking to do. What I'm actually going to do with the FTSE review video tomorrow is go over a pattern on the lower time frames that we had that did exactly that. So we've also got 2825 down to around about 2820. So breaking above here, first of all, if we're coming up here, it's worthwhile looking for the potential resistance for that move back down. And then what we'd do is we'd look for potential support at these levels for the continuation. If we break up and then come down and start to fail below these levels, once again they become key resistance and it's opening up and a potential move to the downside then. So down below coming into next week, we're watching at the sloping support areas really lining up with 2742 to 2728. We also have another one, and you can almost actually call it one pretty large zone down into 2720 here, like this. If we're starting to break down below this next week, this whole section, at present it's key support to look for bullish positions. If we're starting to break down below that level, certainly the pullbacks for potentially breaking out of this pattern and the stronger movements down to at least 2696 toward 2690. So really it's the round number, 2700. And then down below there we have 2682 down into 2675. Both of these levels would then become key support. If we're starting to break down below those levels, we're breaking down below this previous swing, we'd start to expect stronger movements down on the market. So really, those are the key things for the S&P coming into next week. We're really looking at this potential ascending triangle now. Key resistance up above, key support down below. At present, we can continue looking at them as support and resistance. If we start to break up above, we're looking for those stronger bounces on pullbacks, unless we start to break back through. Down below, if we break down out of the sloping support, the pullbacks, and then resistance for those moves down, key support down below. If we start breaking down below these levels, really, we're then looking at potentially a stronger correction once again on the S&P, and potentially the market turning or confirming a little bit more of a bearish bias. Okay guys, so now let's move on to the NASDAQ. So with this market last week, we were up at all-time highs. And what we went over was that we don't really have a lot of information, because when we look left, there is no price action structure to take into account. So really all we were doing was using the round number, also the high from the 9th of March as our upper band, which was sitting around about 7,100. What we see is we then broke up and tested towards 7,200. Again, that round number, then had the very strong move down, closed, opened in this 7,040. Let's make it a little bit bigger so we can see it. 7,040 down to 7,033 zone. We then came down and tested at our key support. We didn't quite reach there on the Wednesday. On the Thursday, we tested at 7,005 to 6,966. We found the strong bullish bounce. And then on the Friday, we've just had a bit of a move down once again. So coming into next week, what are we looking at? So first thing is, I'm just going to get rid of these lower zones because we're going to go over them again. What we're going to do is add in another price squeeze actually on the NASDAQ. So a little bit different to the S&P, but the market is still potentially squeezing. So let's make it a little bit smaller so we can take into account the most recent price action. What we're looking at is potentially this market is following a level of support. So basically I'm using the spike down, and the spike down from 1st of March, 5th of March, and the 7th of March. We've tested once, twice, 3 times. It's lining up with this previous swing from the 9th of February and the 8th of February. Market has been trending upward. Now we've made new all-time highs. However, what we seem to be doing, or what we're potentially doing, it's not confirmed as yet, is we are now starting to squeeze. We've had the swing, we've then pressed up, tried to break through once and twice, and had a couple of failures. So potentially now, we're looking at the market coming into a level of squeeze, where we would then start to wait and look for a potential breakout. It would also make a little bit of sense with last week's price action being so compacted. This happened on the FTSE as well. We had a relatively quiet week on that market. It was very low volatility, and it's potentially because we're moving into some sort of a squeeze. Okay, so let's have a look at these zones. First of all, 7,115 to 7,096 is still good. We can bring it down ever so slightly to take into account this spike up, which is 7,095. It's basically sitting right at the level right here. Up above, we now have the all-time highs. Again, we're at about 7,186 down toward 7,156 right here. Down below there, let's take into account the 3 days where we just moved sideways. We've got really 7,000, the round number. all the way up toward 7,022. So again, it's still lining up with our previous level of structure that we were looking at last week. Now we've had a spike up here. We've got a level sitting around about 7,080. I'm going to say that's a little bit more minor coming into this week. Really, I want to focus on these three. This remains key support at present. Also coming into Monday, it's going to be testing right on this potential sloping support level. It's key support at present. If we start to break back down below this level now, there's the potential there. That's an early warning sign that the trend line would be starting to fail. We could look for resistance and moves down on this market. Up above, we'd be watching for that potential sloping resistance. Again, if we start to break up above, the pullbacks and the continuation would start to make sense. We don't have any other price action up above as yet. We need to wait for the market to give us a little bit more evidence. Now down below, we've got a few levels of pretty good support down here. 6,940 down toward, let's have a look at this. This is really going to be two zones for me. So we'll take this one down to, just trying to get this right in my head. Let's have a look. We're at about 6,910. So we're using the most recent levels of tests. So we're spike up. We then tested again on the Thursday before breaking higher. We pressed up and tested at that level on the 23rd of February. Now we've got one relatively close just down below. Really, it's one big zone. So 6,900, the round number. Surprise, surprise. And then we come down into 6,877. Key support. Really, if we break down below this trend line, it's worthwhile looking for the resistance and the moves down. But for me, this is a very key support also. So coming down, you can look for the bounces. Potentially the bounces back up to test at the trend line or to test at this previous level of structure, 7,020 to 7,000. We could then look for bearish price action once again. If we're breaking down below these levels, again, it's opening up potentially that stronger bearish movement on the NASDAQ, back down to at least really 6,825 to really 6,800, which again would be a level of support right here, like this. And really those are the main levels coming into next week. If we start to break down below this level and really 6,765, then potentially this market again is going to be turning a little bit more bearish once again. But at present we're still holding a bullish trend line. We're still bullish. We're just looking at the if-then scenarios, which is what you want to do when you are, especially when you're day trading. Because day to day we can switch what it is that we're looking at. We can be bearish one day, bullish the next day. We can be neutral the next day. We're only interested in the short-term movements of the market, so we can trade day to day. So key resistance up above. We still have that level 7,115, 7,094. Key support 7,021 to 7,000, especially if we're breaking down below the trend line and this level. We could then look for the resistance and the moves down into 6,940. Now we do have a spike up here. We'd watch for potential support, 6,962, especially if this was a failure. So we failed false breakdown, found support and broke back up. This would be a good level to watch for it. Just be a little bit cautious. 6,960. 6,937, sorry, 6,910, 6,900, 6,877. Very key support at present. Breaks down below. We'd then be looking for the stronger moves down towards 6,823 to 6,795. Okay guys, so that is everything for this week. As always, I hope that was helpful. I hope you all have a great trading week next week. I'm James Orr, and thank you.